If you trade the DR basics, there's one thing you must understand early on. Not every session will be clean, not every confirmation will follow through, and once in a while a session will even turn false. And that's perfectly fine because probability trading isn't about perfection, it's about reading structure, applying discipline, and executing the same way every single time. Today's video covers 3 real DR sessions from last week across gold, crude oil, and Euro FX. All 3 assets give valuable lessons. Let's get right into the first trade. Gold's overnight session at 5 a.m. presented a clear picture. The very first thing you should notice is that the aftermarket highs were violated, which instantly invalidates both the DR downside and the DR upside model. The only remaining structure is a potential DR range expansion model, although at this moment there is still no confirmation to either side. From here, preparation becomes everything. You can already extend the aftermarket DR levels and highlight important volume and gap imbalances. 2 gap imbalances and 1 open magnetic volume imbalance stand out immediately, and if you're trained in DR basics, these should catch your attention right away. As the session continues, the DR box closes green, which historically gives roughly a 70% probability of seeing a long confirmation. That confirmation unfolds right after, and from that point forward, your focus is entirely on long setups for the rest of the session. You can already see how important the middle of the range becomes when price rejects the defining range mid twice, perfectly lining up with an intraday gap imbalance and the ADR lows. That kind of structure is pure clarity. In a DR range expansion model, the natural target is the 1 standard deviation level. But here you also have confluence from the open magnetic volume imbalance above and the previous day's regular session lows. That combination strengthens the case for an upside expansion. As price hovers, pulls above the range and then retraces back into it, you don't get a clean setup until price rejects the closing price. With stops placed below the gap imbalance and below the closing price, this trade offers a solid 4.5 R opportunity. Price pushes up but eventually pulls back and stops the position out. And that's completely fine. Losses are part of the game, and even the best confluences won't guarantee a follow-through. Later in the session, however, the probabilities still clearly favor the upside. Price rejects the range mid and the aftermarket lows for the 3rd time during the session. Would I take a second trade here? Absolutely. This one offers around 4.3 R, and if it hits, the session ends in roughly 3.3 R net profit. As price pushes higher and the session approaches its close at 8:30 a.m., you typically move your stop loss to break even to protect yourself. Either you get stopped out or the target gets hit. In this case, price moves straight into the open magnetic volume imbalance, fills it, and extends beyond the 1 standard deviation level. This session is a perfect example of what a high probability DR basic setup looks like with only a few additional tools on your chart. Crude oil confirmed long almost immediately after the overnight session closed green. The closing price is above the opening price, signaling strength. 2 DR session levels from the previous week aligned with the current range, and these should always be extended because they play a crucial role in decision making. As always, toggle on and off the imbalances and previous DR levels as needed. Even with the long confirmation, there's something important you must consider. The relationship between the aftermarket and overnight session shows that the DR downside model is still intact. A green box and a long confirmation do not guarantee a breakout through the ADR highs. It's smart to slightly reduce expectations in such cases and keep an eye on the aftermarket mid or the lows, because those levels can act as significant structural points. About 15 minutes after the long confirmation, price rejects the lower previous DR level. While retracing, it leaves an open magnetic volume imbalance above, which creates a valid trade idea. A straightforward stop would go below the lower intraday gap imbalance and the previous DR levels, while targeting the aftermarket lows, offering around 3.3 R. 10 minutes later, the position gets stopped out, -1 R. Price then retraces much deeper into the range, all the way down to the opening price and the IDR low. It rejects that area and builds a beautiful retirement setup with almost 8 R potential. I would take that trade anytime, but this time even that setup fails. Price stops the position out and closes below the defining range on a 5-minute time frame, turning the session into a full false session. This is exactly why I teach you to risk a maximum of 2 bullets per session. Minus 2R is part of the game. That's how you protect your account and avoid the emotional spiral that leads traders to take a third trade they should never take. Even when probabilities are strongly in your favor, nothing is guaranteed. Crude oil historically shows roughly a 34% chance of turning into a false session in Friday's overnight session long confirmations, and this was one of those days. So you might think about reducing risk or not trading crude oil at all if the overnight session confirms long on a Friday. The lesson here is simple. Stick to your rules, accept the losses, and move on. You don't need a perfect win rate, you just need consistency, preparation, and discipline across multiple sessions. This was Wednesday's regular DR session at 9:30 a.m. on Euro FX, and the opening immediately revealed something important. Both the DR upside and downside models were broken, while a DR range expansion model or trumpet-like price action became possible. Before the regular DR session even finished forming, you look to the left and instantly notice 2 previous DR session levels perfectly aligned with the opening candle. These become your make or break areas. Price fails to close above those previous levels and drops lower. Before the session even reaches 10:30 a.m., all 3 DR sessions have already expanded in size. When the regular session finally forms at 10:30 a.m., the DR box prints red, which gives you roughly a 70% probability of seeing a short confirmation. And right away the short confirmation follows. With the confirmation candle alone, price already reaches half a standard deviation, so the next natural target becomes the 1 standard deviation level. While waiting for a retracement, this is where preparation becomes crucial. You highlight the previous DR level inside the range and the 3 open volume imbalances below. These imbalances often act like magnets and will eventually be rebalanced. 15 minutes later, price rejects the defining range low by failing to close above it and rebalances one of the volume imbalances. This creates a great trading opportunity. Your stop loss can be placed above the closing price, above the IDR low, and above the rebalanced volume imbalance. With those levels protected, the trade offers around 3.4R into the 1 standard deviation target. A stop above the previous DR session level would be far too wide, and the risk to reward would be terrible, which is exactly why preparation beforehand matters so much. If this trade got stopped out, there would likely be another opportunity in the upper area of the range where several other confluences align, including the opening price, 2 previous DR levels, and another volume imbalance. Price hits the 1 standard deviation level beautifully, retraces slightly, and then drops all the way to 2 standard deviations by the end of the session. So here you saw 3 very different sessions. 1 clean high probability win, 1 full false session with disciplined risk management, and 1 perfect example of preparation leading to precise execution. This is what the DR basics are all about. Reading market structure, recognizing probabilities, and executing under strict risk management. Not perfection, just consistency. Everything I teach here on YouTube is still only the foundation. If you feel comfortable with the DR basics, combining them with data is often the piece that brings everything together. Have a great trading week, and I'll see you in the next video.
We're gonna take on the world.